Hello traders, and welcome back to Trading with Bill, Options and Forex. Traders, great to be with you on a Monday, beginning of our trading week, July 28th, 2014. Have a lot to talk about today. Got about 16 slides to get through today. So let's get started. Before we get started, let me introduce myself to you. My name's William Gilday, and they call me Bill. So this is the story. We're helping losing traders become winning traders. Traders, you can always leave comments on this YouTube page, or you can go to my website at tradingwithbill.com and leave comments. We would appreciate it if you would subscribe to my YouTube page, and you'll get an email every time I place a video up on the web. Traders, I started trading in 2006, and in 2008 I retired from an awesome career in the fire rescue department out of the great state of Florida. 9 days later, I went on a 3-month vacation to Thailand. Traders, I'm still here and it's 2014. I have to tell you that I love trading options and Forex on a daily basis. I do it on a daily basis. Love being in front of my screens. Love doing analysis. Love listening to fundamentals. It's a great time. It's exciting. It's invigorating. And sometimes we lose some trades, but that's okay. We are most of the time in profit. All right, traders, let's get moving. Let's hit the risk disclaimer real quick, the legal stuff. Forex and options trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the options and Forex market. Do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. I know I can talk. Anyhow, what that means is if you're on a demo account and you go to a live account, things are going to change. All right, traders, let's move over and let's talk about the news. Traders, I have to tell you, there's not much going on today in the news world. All we have for high impact today is pending home sales out of the U.S. in the U.S. session. Looking down the news calendar, I am noticing there's not even any medium impact news events other than we have the Swiss giving us the U.S. dollar Swiss index. And that's really about it, traders. Not a lot of news going on today. And that news has already come out, and it was as expected. Okay, so what do we got going on for the markets as it closed over the weekend? Well, not too good, to be honest with you. A lot of red. So in the Dow 30 closed 0.72%. The S&P was down 0.48%, and the NASDAQ was down 0.45%. Going across the pond, we have the DAX that is currently trading when I'm doing this video is at down 0.13%. The FTSE is up barely at 0.06%. The CAC 40 is up at 0.23%. Eurostoxx 50 is barely down at 0.01%. Okay. The Nikkei 225, which is closed up today at 0.46%. Shanghai is also closed up today at 2.41%. Hang Seng, which is currently trading, is at 0.86% in the green. And traders, the S&P ASX out of Sydney, which is currently closed barely down in the red at 0.11%. So that's what's going on in the indices today, traders. So not much going on as far as data goes today. So we're looking at a technical trading day. And remember, it's Monday, so we want to make sure that we have confirmation on anything that we do. All right, traders, got a lot to talk about today, so let's get moving. This is options talk. Let's talk about some options. All right, we're going to talk about some things that we're looking at today. We did not get many option trades on Friday. Friday, the markets were really crazy, and we saw a lot of red in the markets. I wasn't willing to jump in at that point, even though we talked about this on Friday, that I wanted to start to get into these trades earlier than I'm doing, because I'm getting into them like on Tuesday, and I really like to get in on like Monday. So we'll see what happens today at the New York Open, but we got plenty of slides to take a look at. Let's take a look at last week's winner that did me very well, and this is the Russell 2000. And remember, traders, last week we got in the Russell at 11.45, made very good profit, and was only in the trade 24 hours. However, look at the bottom of the chart. The top indicator is the DNA, the market DNA, and look at that, it's below the 50 line. Look at stochastics, down into the, just heading down, just red, right? And look at MACD also down in the red. So we might be looking at, maybe a bear call. So we'll see what happens here, but we're going to look at this real closely at the market open. We might jump into this. This might be coming back down to that 1122 of that 200 exponential moving average. So we'll keep a really close eye on that. If we get green at the open, we're going to skip it and see what happens. Really don't want to fight that 50 exponential moving average, which is that gray line again. But from this point at 1146, not a bad trade. So if we see blue at the open, like maybe an hour into the open, we're going to jump on it. Okay, the next charts we're going to look at, these are just charts that we're looking at for possibilities, okay? So one of the things we have to watch out for today is that we're not getting into any kind of a stock, and I'm not really trading stock options this week and next week because of earnings, unless they've passed their earnings. Apple has passed its earnings. We are now very close to the high. The high is at 97.88. We closed on Friday at 97.67. So this looks really, really nice for us. And we're looking possibly at a bull put. So that looks pretty nice. We might jump into this bad boy if this thing continues to the upside. All right, let's go over to the triple Qs, which is our power shares. Look at this, really moving to the upside. The high was at 97.51, but that's the high. And if you look left of the chart, there's nothing to gauge this on. However, if you look down at the bottom of the chart, all three indicators are pointing down. So we're going to have to keep a close eye on this. This one, we might be looking at a bear call again down to the downside, and we'll just see, hope this continues to drop throughout the week, and maybe we can get out of this by Wednesday if we can get into this triple Qs by today. But we'll have to see what the open does. This can spin around, you never know, right? All right, let's look at the ES. These are the E-mini S&Ps. So these are the futures. And let's take a look at this. Look at how bullish this is. This is very bullish. I don't trade futures only because of the cost factor. They're very expensive for me to trade futures. They take a lot of margin out of my capital. So I don't trade them, but I wanted to show it to you. So if you were trading futures, this is not a bad one to jump into. However, take a look at our indicators on the bottom. And two of them are pointing down, one's pointing up. So not really sure how we're going to handle this one. We're just going to watch this one and play with this one. I might do this one on a demo account just to see how it works. So that's going on with our options update. Let's head over to the Forex charts. Here we go, traders. What do we do on Forex on Monday? We do the euro dollar and the pound dollar. So this is pretty easy on the euro dollar, isn't it? Here's a euro dollar daily chart. As you can see, we are definitely heading to the downside. It's bearish. We're below the 200 exponential moving average, and that is what we like. We'd like to see this fib back a little bit, which we'll take a look at on the 60-minute chart in just a second, and we could take this short again. Remember, we have dollar strength across the board. The dollar is very strong. If you remember last week, we looked at the dollar index, and the dollar index is screaming to the upside. So we have dollar strength. Okay, let's go over to the 60-minute chart. This is the 60-minute chart. On the 60-minute chart, you can see it is now giving us a nice retrace. We wanted to come up to one of our fib levels within our rectangle there. You can see the down red arrow, and you can see we want to take profit at S1. And above R1, you can see we have our diamond there where would be our stop loss. However, take a look at the Williams R% indicator on the bottom of the chart. It's screaming to the upside. So we're going to need some confirmation, being it is a Monday, no data coming out, so it's a technical day. So we need to be real careful on this trade. Don't be jumping in. I do have two take profit areas, S1 and S2. It'll be a nice trade if we can get this to work. Maybe the bounce is going to happen at the daily pivot point, and that's at 34.41. That would be great. All right, let's take a look at the 15-minute chart. This is the 15-minute chart, traders, and look at this. Another nice trade. However, we're in a bad spot here. We're not even close to one of our fib levels. We're just inside the rectangle. And the problem is, if we take a short here on this 15-minute, we are at that deviation settlement level. And do we really want to be trading into that? So traders, I got to be honest with you. I'd really like to see this get up to 34.45 43, 44, as close to that 200 exponential moving average, and then we can dump this baby so we can make sure that we're safe when we get to that deviation level, just in case it bounces. And there's a good chance it will. However, look at the Williams R percent indicator on the bottom of the chart. That is looking sweet, my friends. Absolutely looking great. All right, traders, let's head over to the pound dollar. This is the pound dollar. This is the this is the daily chart, traders. And traders, if you have the Ninja Trader platform, go over to this website, Google it, Indicator Warehouse. I'm telling you, they have some free indicators out there that is absolutely awesome. Go take a look at it, such as the timer in the bottom of the chart. Check out, we have this dotted line that you see. This is just a 21 exponential moving average. And what I have it set at is 3 pips away from price action. So when it gets 3 pips to the price, it will give me a green candle. Really cool stuff. All right, so what do we have here on the daily chart? Traders, this is, if you look at the top of this chart, you can see it's like in a C shape. This is an old man easing into a hot bath. To me, traders, this is absolutely heading down to a bearish move here. So I think we have a change of trend here, at least until we get to 6,900. And we're just going to have to play it to the downside. So let's take a look at the hourly chart. So this is the 60-minute chart. Look at these candles, traders. Absolutely horrible, right? No price action. Why? Because the pound is and the dollar is strong, but the dollar had a bad day on Friday, and we ended up with this horrible-looking range-bound chart. But as we know, 80% of the time, price is in a range. So you know what? We need to start learning how to trade in ranges, right? And we're going to start getting into that next week on some really good strategies to be trading in the range. And I'll give you a clue. We might start using some Bollinger Bands. All right, traders. So what we want to happen here, you can see the rectangle with the red arrow. We want this to pull up into one of these fib areas, the 38, the 50, the 61, or the 78, and then we can take this down. I've got to take profit at the S2. Now realize the S1 is probably going to give us a bounce there, but that's all right. But we want to get down to S2, which is a major reversal pivot point. Take a look at the Williams R percent indicator on the bottom of the chart. Is that not looking great? Absolutely bearish, down below the negative 20 line. So let's go and let's see if we can get this to bounce up before the London. Well, London is open already. We're already 1 hour into London open. And look at how horrible these candles look. Not too good, huh? All right, let's take a look at a 15-minute chart, see if we got something there. All right, here's the 15-minute chart. Now, we are inside our rectangle to take this bearish. Look at this, traders. I've only taken this slide about 20 minutes ago, so this is fresh. And also, we have a doji, so this is great. That means we might be able to get our bearish candlestick formation and head this to the downside. What is the concern, though? The concern is we're shorting into a deviation settlement level, and we don't like that. The other thing is, look at the Williams R percent indicator on the bottom of the chart. This might go up a little bit more, which is okay. The closer we get to that 200 exponential moving average, the better. Remember, traders, if it closes above the 200 exponential moving average, this trade is off. We're done. Finished. We have to reanalyze this trade and think again. So as long as it doesn't close above that 200, we're still in it, and we can take this anytime we have a good, strong, bearish candlestick formation. Remember, traders, I said it like 2 times already. It's a Monday, no fundamentals coming out, so it's totally a technical trading day. Traders, I'd like to thank you for being with me again on a Monday, July 28, 2014. It's always a pleasure to be with you. Please subscribe to my YouTube channel if you would, and every time a video goes up, you'll get an email stating that I have a fresh video up for you to take a look at. And it's always been a pleasure. Traders coming to you live from Thailand. Cloudy and rainy skies today. Not fun on the white sandy beaches and rough waters in the Gulf of Thailand. Traders, have a great trading day. I wish you the best. Grab them pips and watch those options. Traders, till tomorrow, have a great day and bye-bye.